Hey everybody, this is Jason Eichmiller, a reverse mortgage expert. I'm coming to you today to give you some information about some upcoming changes to the reverse mortgage hecm program that HUD actually just passed yesterday, August 29th, that are extremely concerning, and they're time sensitive as well. Actually, they're very time sensitive. So you may have heard of this. Word is kind of spreading out, but whether you have heard of it or whether you haven't, go ahead and listen in. This will probably take no more than about 5 minutes to explain the most important stuff. And I'll try not to digress. I'm trying to keep this absolutely as short as possible. So let's go. So what just happened here? Little tiny bit of background. First of all, HUD government governs over all the reverse mortgages out there. So bottom line is HUD makes the rules. HUD is the boss. Yesterday on August 29th, HUD released Mortgagee Letter 2017-12. Who cares what it's called? We care about what it does. In it, it addresses a couple of things, but one major component of reverse mortgages that it addresses is how much money a client can qualify for. Won't worry about the other stuff because it's small potatoes. So how does HUD calculate it? HUD calculates how much money a senior qualifies for in a reverse mortgage based on a few things. Basically age, interest rate, and home value. That tells us how much money we can give a senior citizen. Now, what HUD has done, the powers that be in their wisdom or lack thereof, they have drastically reduced the amount of money that a senior qualifies for. Now, how much less, you may ask? I did too, and I looked, and I did the math, and I was kind of shocked. So here's where we're at. So let's look at a few different ages here, and we'll figure out how much a client can currently qualify for and how much they will be able to qualify for when these new rules take effect. This chart is going to be percentages. The next chart will actually be real world. It's going to be dollars, so you'll be able to conceptualize it and actually see what it means. So we look at age 62, 72, and 82. Currently, which is this middle column, currently seniors can take about 52% of their home value when they're 62, 59% when they're 72, and 67.4% when they're 82. Not bad, and it's been this way since 2014. When these new changes take effect, though, they're going to drastically drop by about 20-ish% más o menos. They're going to drop the amount that a senior is going to qualify for. A 62-year-old is now going to qualify for 41% of their home value. A 72-year-old will qualify for 46.7%, and an 82-year-old, after living for so long and getting all that wisdom and longevity, they're going to be able to get 54%. But you can see the difference between current and what they're going to get, and it's a pretty big whopping difference. So now let's look at it in numbers. So this is we're going to look at these numbers. We're going to base it on an average home value of $200,000 because it's pretty close to average and gives you an idea. And this is, by the way, this money that they get is before closing costs too. So they won't even get this much money. But right now, a 62-year-old qualifies for $104,800. After these changes, they're going to qualify for $82,000. A 72-year-old qualifies for $118,200. After the changes, they're going to get a little bit over $93,000. And an 82-year-old qualifies now for $134,000, almost $135,000 on a $200,000 house. Now they're going to qualify for $109,000. You see there's big differences between the $109,000 and $134,000, the $93,000 and $118,000, and the $82,000 and $104,000. Not a good thing. So what's our big takeaway here? Seniors are going to qualify for dramatically, whatever synonym that begins with a D, less money after these changes take effect. Seniors who are purchasing a home because they qualify for less money, the hecm for purchase or reverse mortgage purchase is one of my favorite things to do with a reverse mortgage, but when they're purchasing a home, they're going to have to put a lot more money down. Final thoughts. What are my final thoughts? This rule is going to be really tough on seniors who have high mortgage balances, who need to purchase a home, or just need as much money as they can get. It's good. In some cases, it's going to give them less. In a lot of cases, it's going to disqualify them from this program. When does this rule take effect? It takes effect on October 2nd, 2017. So we got about a month. Now, in between now and October 2nd, how do we get around this rule? What has to happen is a borrower or a client, a person, senior, needs to get counsel. We'll speak to a reverse mortgage counselor, complete that, and complete an application. That will seal up their FHA case number, and it'll mean that they can play by the old rules. Once October 2nd hits, anybody who doesn't have their FHA case number has to go by these new rules. So that's where we're at right now. It happened yesterday. This isn't a very smooth webinar. I didn't really rehearse this. I just want to get you guys out the information. If you have a friend, relative, yourself, or a client who's interested in a reverse mortgage or kicking it around, please have them act. I can be reached at this phone number, 267-289-1095, or the cell 443-802-5923. My email address is right there, jasone@reversemortgagereality.com. But this is not false scarcity or anything like that. This came straight from HUD. Yesterday, Secretary Carson, they put out a release, and I'm afraid for a lot of people, because a lot of people are going to not be able to get this program that helps so many after October 2nd. So, more of the story. Let's help whoever we can help. We've got a month to do it, and thank you all very much for your time. Take care of yourselves.